Yeah. Okay. Good evening, students. Welcome back. So today we will cover remaining part of chapter 4, that is risk assessment and internal control. Now, before we proceed further, I would request all of you to just have a look at this board. If you are live, you are watching, just have a look at this board. There are 3 questions written on this board. Just kindly study these questions. Kindly study this question. I think you are able to look at the board clearly. Yes, somebody has joined. Kindly study these 3 questions and just think in your mind what could be their answer. Just few words or response you can send me by mail. Just right now in this live session, what are these questions and how these are to be answered in your exam? Does anybody have any idea? Now, if some of you have not joined, I would explain. Now, first question is, audit risk is a technical term related to process of auditing only. Discuss. It's a sort of 3-marker question, 3 marks question. So many a times students get confused in the exam what is to be written in the answer. So the basic thing is, the moment you see the question, it should strike in your mind what is to be written and what is the answer. You have to write it quickly in your own words if you are very clear about it without wasting any time. So till now I have not heard any answer. First question is, audit risk is a technical term related to process of auditing only. Now, how this question has to be attempted in the exams? Now, as we have studied in the last session, audit risk is a technical term. So we have to write only the definition of auditing, audit risk, and what is not covered in audit risk. We have to explain that audit risk does not cover the business risk of auditor or professional risk or risk arising from legal liability, etc. And it is the risk of only an auditor expressing an inappropriate opinion when financial statements are materially misstated. Okay, so this is to be written. Apart from the meaning of audit risk, what has to be emphasized, that audit risk does not include this thing. It means that audit risk does not include any sort of legal liability or professional or business risk of the auditor. It is only a term devised during the audit process, so that for understanding the audit process better, so that auditor can assess what is the kind of risk, and he has to keep the risk low. So you have to frame your answer in that way. So these are internal students, and most of this type of questions are straight away lifted from your board of study material. When you would study the study material, this chapter, you would find these lines written somewhere hidden. So you have to read between the lines and understand clearly how that question is to be attempted. Okay, so I think I have explained to you question number 1. So 3-marker, you have to write 5-6 lines and it should be very clear. You have to explain the meaning of audit risk and what is not included in audit risk, that is legal liability, etc. Number 2, now this question is whether it is correct or incorrect. Now, what is the question? Question is, statements issued by ICAI are in respect of accounting matters only, whereas guidance notes are for auditing matters solely. So this question relates to your chapter 1. This question relates to your chapter 1. In chapter 1, we had studied that statements and guidance notes, both of these are in respect of auditing matters as well as accounting matters. So this statement is incorrect. Remember, incorrect type of questions, you have to also give the reason. The question, 2-marker question, which is compulsory, first question, you have also to give the reason why that particular statement is correct or incorrect. So here you have to write that ICAI issues statements as well as guidance notes both in respect of accounting and auditing matters. The statement is incorrect that statements are issued only in respect of accounting matters and guidance notes are in respect of auditing matters. That is sufficient. So question number 2 is also over. Now question number 3. Just think over it. How this has to be attempted? What is to be written in this question? Inherent and control risks exist independently of audit of financial statements. Discuss. What is to be written in this question? Now, some students make mistake of writing the definition only of inherent control and control risk, but they do not explain this definition in the context of this statement. Now, as we students, as we have studied in last session, that inherent risk arises because due to the inherent nature of transactions, and control risk, it arises because the internal control devised by the management to detect fraud or error might not work effectively, or it is not able to prevent errors or frauds. So these inherent and control risks, these are entities risk. These are risks of organization and they exist independently of audit of financial statements. It means that whether an audit is conducted or not, these risks would always exist. भाई चाहे audit हो या ना हो, but these risks would always exist because these risks belong to the organization, to the company concerned. So inherent and control risks, they always exist independently of the audit of financial statements, whether an audit is carried out or not carried out. So this question has to be attempted in this way, that ultimately you have to justify this statement by correlating it with the meaning and nature of inherent control, inherent risks and control risks. Okay, that should be very much clear to you. So now we shall move on to our remaining portion of chapter 4, that is risk assessment and internal control. Students, one more thing that is very important. You can say it is an announcement. I have, look, important announcement. There is an important announcement. You can note it down. Yes, there is an important announcement. Now, I have been directed by the Board of Studies to inform you that in chapter 5 and in chapter 10, wherever there is reference to Caro 2020, This should not be studied. Rather, Caro 2016 would be studied. Now, what is Caro 2016, Caro 2020? This you would come to know when you would read chapter 10 of company audit, because the implementation of Caro 2020 has been deferred by the Ministry of Corporate Affairs due to COVID-19 situation. So reporting in Caro 2020 was quite lengthy and extensive. So for May 2021 examinations, Caro 2016, which is a relatively short order, that has to be studied. Whereas your study material incorporates Caro 2020. So you would be getting Caro 2016 in your RTPs. Okay. So that should be clear to you. Now we first move on to our remaining portion of the chapter. Now students, we had studied what is risk assessment, what is audit risk, what is inherent risk, what is control risk, what is detection risk, and what is meant by internal control. So we have studied internal control. By now you have completely understood the definition of internal control. That internal control, for recap purposes, internal control is a process system designed, implemented by the management to ensure reliability of financial reporting, safeguarding of assets, effectiveness and efficiency of operations, and compliance with relevant laws, regulations, as we have studied. Now, for the sake of understanding, better understanding, we study components of internal control. We will study components of internal control. Now, when we say components of internal control, so these components are not something which you have to find out physically. These are just broken into broad heads to help you gain better understanding. That what is to be looked into internal control of an organization. So there are main 5 broad headings under which we study components of internal control. First, I will write all these 5 broad headings and then we will study one by one. Okay. Now, first component of internal control is control environment. Second is entities risk assessment process. Third is information processing. And communication. And fourth is control activities. Fifth is monitoring of control. Rather, we will say information system is not information processing, information system and communication. Now we'll study one by one. Now, what is control environment? We'll study one by one, friends. What is control environment? Now students, control environment means the environment in which the said organization or entity is operating. Okay, that is control environment. Now who makes this control environment? First of all, management. Now the auditor has to look whether management or those charged with governance or honors, they are ethical people, they are honest people. That is very important, because if they are not ethical, they are not honest, then the system devised by them cannot be relied upon. Now I'll give you an example. Say how, look, recently a survey was carried out to about 1-2 years back, in which top 100 companies of the world, top 100 ethical companies, top 100 ethical companies of world were listed. Now what does this mean? This means that management of these companies is or was honest. They indulged in ethical practice. They didn't make profits at the cost of general society. They followed all the rules and regulations. Like their name of the some of the companies, like one is Microsoft, many popular names, Dell, Canon. So these are companies from India. I think there is Tata Steel and Wipro. So the management has to be ethical and honest. So if the management is ethical, management is following ethical practices, is following honest practices, it is working with integrity, then the controls devised by management or control system devised by the management, it can also be relied upon by the auditor, because he sees to it that he is dealing with good persons. Okay. So another aspect of control environment is that good HR policies are employed by the organization. HR, you know, human resources. Now students, I would give you an example. There is a company in US. There is a company in US with the name of Costco. It is one of the largest retail companies in US. Now it is known for its best HR practices. It hires the employees at good remuneration and it retains the employees. So HR policies followed by an organization, these are also very important in determining control environment. Another factor affecting control environment is organization structure. Organization structure, you already know. You have already studied in your class 12 whether the company follows top down approach, bureaucratic approach like in government departments, or there is team based work. So these kind of things, these factors, these have to be recognized while understanding the control environment of the organization. What is the philosophy? What is the philosophy of management? How does management take decisions? Has the management contributed to social responsibility or all these sort of things? Although CSR is mandatory for certain type of companies. So I think I've explained to you what is meant by control environment. So auditor just has to study the overall environment, overall management philosophy in which it is functioning, so as to understand whether the control system, whether the internal control system that has been devised by the management can be relied upon or not. And this one more thing I would like to add is that this is example I have given you of big companies. These are global companies, MNCs. What about small companies? Small entities. How do you assess them? How do you assess their control environment? Now look, as we have already studied, the control, internal control and control environment in small companies is not that formal or is not that structured, because two or three persons or some persons connected with management are taking all the decisions. There is little segregation of duties and responsibilities. So this can work in both ways. It can help in exercising better control also, or it can go other way also, that management takes all the decisions at its on whims and fancies. So in this case, you have to interact with the people connected with the management, with the key persons of the management who are behind the show, who are behind the running of the company. So here comes into play the concept of behavioral science, which we had studied in chapter 1. I think some of you might be remembering that I had told you that it is very important to understand and interact with the personnel, and what is the relationship between auditing and behavioral science. Now it is coming more explicitly here. So like few lines of popular Hindi song goes, किताबें बहुत पढ़ी हैं तुमने, चेहरा कभी पढ़ा है. So literally it means that you have to understand the people. What could be how whether management consists of such unscrupulous people that they would that the financial statements prepared by them are would be unreliable. So this comes through years of skill, experience and knowledge. So this is what is known as professional judgment of auditor. So I told you in my last session that audit risk, students, is not capable of precise measurement, but it is left to the professional judgment of auditor. So this way auditor has to study the control environment. Now we come to second point. Second point is entities risk assessment process. Entities risk assessment process. Now you would say risk assessment by auditor was known to us, but what is this entities risk assessment process? Now look, before any internal control is established, the entity also, the organization, that company, they also carry out a risk assessment. What do? Identify the business risk. Now they would identify the business risk. which is relevant to financial reporting. Now, whether the risk is important or not, significant or not, or then what is its possibility of happening, likelihood of occurrence, and if it happens, what would be response? So the auditor has to study entities risk assessment process also, that what plan they have made, that if something wrong happens in their business, we will study it, students, it with some examples, that if something goes wrong, then what would be their response? What would be the response of management? How would management react to it, and what would be its effect on the financial statements? How these would be reflected in financial statements? So I think you have understood there are 4 parts of entities risk assessment process. Number 1 is identify business risks relevant to financial reporting. Again, whether the management assesses whether the identified risk relevant to financial reporting is significant or not. If yes, then what is the likelihood of occurrence? What is the possibility that it will occur? These are all subjective things. These are all subjective things. So what is the likelihood of occurrence, and what would be response of the management if that thing occurs? So that is very simple. So we will study it with the help of some examples, like students, suppose this is a common point which you have heard many times also, earlier also, like change in law or regulatory process. I'll give you an example how significant it is. Now, some of you who might be regularly reading newspapers, they might be aware, students, that there was a Supreme Court decision. What was it? There was a Supreme Court decision about 1 year back, one and a half year back, directing the telecom companies. Telecom companies, you understand? These mobile operating companies, the telecom companies which are running this mobile network, like Bharti, Vodafone. So there was Supreme Court decision asking these companies to pay certain amount on spectrum sharing. So this amount ran into hundreds, thousands of crores of rupees cumulatively. Now, if these companies had to pay the amount in one go, many could have gone bust. Many could have become insolvent. So later on, the again petition was filed. Still, Supreme Court granted period of 10 years to pay the amount, but still the amount is very, very large. So it is going to affect the cash flows of these companies, of some of these companies. So now this change in regulatory process or law or legal environment, it has impacted the financial statements of such companies. Another thing is new technology. Suppose some new technology comes, then what would be the response of the management? Like I would give you an example of this. 5 to 6 years back, 5-7 years back, nobody had heard of online food delivering companies. But now, wherever you go, you are hearing Zomato, you are hearing another sort Swiggy, and it could be. So this is the new type of business where food is being ordered online. So there is a new model of business which was not earlier there, and now consumers are also enjoying on through the apps of these companies. This is known as, students, as gig economy. What is this known as? For your better understanding, it is known as gig economy. These companies are part of gig economy. Gig means that these companies hire some temporary workers for running their business, and consumers also join in. This is known as gig economy. So now many other persons, many other hoteliers or restaurant owners, they are also delivering food through these apps to keep their business running. So this is new model of business, new technology, rather new model of business. New model of business. Similarly, this apps which allow for sharing of rides like Ola, etc. These were not heard for about 7-10 years back in India. So these are all new models of business. So the point which I am trying to make is that the management, the organization has to assess that if there are some new models of business which are affecting their existing line of activity, then what would be their response to it? And auditor has to assess that what management has studied and what has been documented by them, what response has been documented by them, what corrective action have been taken by them, so as to keep afloat their business. I think I have made it quite clear. Another thing could be that there could be rapid growth in the business, in the existing line of business, students, and then internal control system already devised by management, say 4, 5 years, 7, 10 years back, it might come under stress. The controls might be under stress. भैया काम बहुत ज्यादा है, so the system is not able to cope up with already existing controls. So these are collectively entities risk assessment process, and auditor studies these risk assessment process as part of components of internal control. Okay, now we come to third point. Now third, information system. Information systems divide. Now what is an information system? Information system is a system, internal system of the management by which, say, all the information which is part of the business is generated and recorded correctly. Now what does it consist of? Look, students, these concepts are very simple. These concepts are very simple. Just you have to understand these concepts in the language of auditing. Because in the exams, you have to write in the language of auditing, in the language of accounting, in the language of finance, in the language of business. So you would not be able to express your thoughts in a very, very common way. So that is why I stress that first you understand in simple language, and then you learn, and then you remember the things. Okay. Third point is information system. Now any information system which records all the transaction, etc., it consists of hardware. Just think of mind what another thing could be there. If there is hardware, there would be software. Where there are hardware and software, there would be data and there would be people. So all these things ensure collectively that information is captured in the system correctly and recorded. And recorded how? It should be recorded appropriately. In accordance with the financial reporting framework, proper disclosures have to be made. So the purpose of studying this component of internal control from the point of view of auditor is that he understands that the information systems of the organization are qualitative. What he has to understand, that information systems of the organization are qualitative, that they are producing qualitative information. Now they have hired qualified people, they have hired skilled people, they have installed good hardware and software, so that there are no system lapses, so that all the entries have been captured in the records and no omissions have been made, and these have been recorded correctly in the appropriate cutoff period, and proper disclosure has been made in the financial statements. Now auditor has to ensure their quality. If the auditor is satisfied about their quality, then he can rely on the information. And reliability of financial reporting. It is as simple as that. So I think you have understood. Now we have understood first three components of internal control. I would again repeat these. Number one is control environment. Number one is, students, control environment. Control environment means management philosophy or the values of management, ethical, whether management is followed ethical values or not, HR policies followed by management, organization structure of the management, and whether proper authority and responsibility has been delegated or not. So these kind of things make up control environment. Second thing we have studied is entities risk assessment process. What would be entities response if there is, say, change in technology, or there is some change in, or there is some new model of business coming, like I have given you example of Swiggy and Zomato, or Uber, Ola, new kind of business is coming. So how it would affect the existing companies in logistics and transportation. And if there is change in any significant legal framework, like we have studied the example of telecom companies. So the auditor has to study that whether the organization has made some sort of system for such changes, and whether it has devised its response, or it has put in place some system to devise response to such changes. And number three, information system, which we have already studied right now, that proper hardware, software, data, best people should be hired, skilled people should be hired, so that information recorded and captured by the system and the output which is produced by the system, it can be relied upon by the auditor. So that is very simple. Now fourth point. Now, fourth point, students, is control activities. Now, control activities are internal controls. When we are studying the internal controls, we have to study the controls. What control activities are being performed and how auditor would study. So, control activities are like, we can study it like performance reviews, policies relating to performance reviews and appraisals, like whether the management or those charged with governance has put a policy framework, whether they have devised some policy that every year performance review of its employees would be made or not, and whether there is a policy to say, to give incentive to the honest and hardworking employees, or whether there is system in place to weed out the deadwood. जो लोग ठीक काम नहीं करते उनको, the management should know that these persons are not doing work properly. So whether such kind of a system is in place or not. And number two is information processing. Now that was earlier information system which comprised of hardware, software, data and people. Now information processing. What is information processing? Now when transactions are taking place and these are being captured by the system, these are being recorded. Now these are being processed. This is known as information processing. So there are two kinds of control in this information processing. One is application based control, and another is general IT controls. IT here is not income tax, information technology. So application based control, like suppose I would give you an example. Say a firm has installed a software, accounting software or MIS sort of system for recording all of its transactions, for recording its purchases, sales, stocks, inwards, outwards. So now it must have applied some controls on this application, that this application is working correctly, that all the data is recorded in this application correctly, that there are no omissions. So the auditor has to check this. So IT control. So IT control means, so IT control means the controls which are applicable not only to this application but to all the applications. Is a company might be using many applications within its overall system. So IT controls mean controls which are not only applicable to one application but generally to whole of the IT environment or of that company, like the access to data, to the accounting data might be restricted. There might be system of using some passwords and that sort of things. So these kind of controls might be relevant to the auditor. Now, so I think you have understood application based control and IT controls. I would give you another example of application based controls. Say the organization has installed a MIS or software to record its transactions. Now, what it would ensure? It would ensure, students, that first of all, it would ensure that what is entered is arithmetically correct or not. There are no mistakes, like in banks, say when interest is applied, that system is correctly calculating interest or not. So this is this is relevant to that application. If there is some mistake, then whole of the interest calculation of all the branches would go wrong. Or any kind of sequence checks, that everything is done in a sequence, numerical sequence. These are all part of information application based controls. So another thing is, besides application based and IT controls, there can be physical controls. Physical control means that physically that going to that area is restricted because valuable stocks are lying there. So physical controls, the auditor has to study these also, whether physical controls are there or not at appropriate places. Another thing is segregation of duties. These are very simple management concepts. Segregation of duties. Segregation of duties means, what is segregation of duty? Segregation of duty, students, is a very important, you should understand, it is a very important risk management concept. That duties are segregated, that these are divided. You should understand that these are divided. That one person authorizes one transaction, second person executes it, and another person does another thing. So say he enters in accounting records. So segregation of duties. Segregation of duties is an important risk management concept which helps large organizations to carry out their functions effectively, efficiently, without errors and frauds. So some of you had raised query in last session also regarding dual control. So I am going to link the concept of segregation of duties with dual control of cash. I had given you example of dual control of cash in banks. So I am correlating it here. Now, what is dual control? Dual control, as the name suggests, dual means two, control means control. Control, you know. So control of two persons. Like I had given you an example of banks, that cash is counted and verified by another person while the scroll is prepared by another person. A person prepares the scroll that so much cash was received and so much was paid during the day, and he arrives at net cash balance. Now another person, he only verifies the cash in hand at the end of day. So both persons tally their cash. This person who is in custody of physical cash, his cash should match with this person. So this is concept of dual control, and it is also an example of segregation of duties. That one part of that function is performed by one person and another part is performed by another person. So this dual control and segregation of duties, students, is an important risk management concept to enable large organizations or all organizations to carry out their functions effectively and efficiently. Okay, students. So now we move on to fifth point. That is monitoring of control. Fifth point is what it is, students? It is monitoring of controls. What is monitoring of control? Monitoring of control is that whatever controls they have been devised by the management, now these have to be monitored. These have to be monitored whether these are working effectively or not. what is the purpose of devising a control if it is not working effectively? So the management has to evaluate. This has to be done by management only. So the management has to evaluate whether controls are working or not. Now it can create an internal audit department in the organization whose function is to evaluate all kind of controls in it. We will study internal audit as a separate topic today only. Okay, so these are 5 components of internal control, students, which we have studied today. And I would again repeat all the broad headings of these 5 components. These components are: number 1, it is environment. What it is? Control environment. Number 1, it is control environment. Number 2, it is entities risk assessment process. Number 3, it is information processing and communication. And information system and communication. And number 4, it is control activities. And number 5, it is monitoring of control. So we have understood all the components of internal control. Now we would move on to next topic. That is significant risks. That is significant. Now this topic is also very important, students, from examination point of view. Many a time questions are asked from this. Significant risks. Now what is significant risk? Significant risk, it is, as is clear from the name itself, significant means important. Risk, significant, which is highly important. So which risk is significant? Now question arises, which risk is significant? Which risk is important? So SA 315 says that following 5-6 risks would be considered as significant. Following 5-6 risks, which I am going to write below, these would be considered as significant risks. So these risks are: number 1, risk of fraud. If there is risk of fraud, then it is a very significant risk. Now, risk of complexity of transactions. If transactions are complex, then it is also significant risk. That material misstatement can occur due to complexity of transactions. There might be some very detailed calculation in these transactions, or transactions have been arranged in such a manner that these are very complex. Another thing is transactions with related parties. That these are also by nature very risky, that these may not have been done at arm's length price. These transactions, entering of these transactions might have put the organization or the company to a loss. Degree of subjectivity, if there are some transactions involving degree of subjectivity, great degree of subjectivity, in which the data which is reflected in financial statements consists of many subjective things, in which there are no objective criteria, or which there are little objective criteria. So it also involves a significant risk. It may be liable to misstatement. And another is transactions which are unusual, not in normal course of business. Not in normal course of business. Unusual. So what are these kind of transactions? Not in normal course of business. Now I'll give you an example. Say a company is manufacturing some sort of goods. Say it is manufacturing some shoes, but it is a say listed company, but it has acquired some another company during the year. So these acquisitions do not happen every year. So it is one of the affair in say 5-7 years. So there could be a risk of material misstatement. That is why it is known as significant risk. Or there might be some transactions which are very judgmental, like like sometimes management might decide to write off some old stock which is dead stock. So how much stock has to be written off? What is its value? So this might be subject to misstatement. So it involves significant risk. Or there is one another general example. There might be some fire, or there might be some loss due to some natural calamity. So its effect on financial statement has to be arrived at. So all these kind of transactions carry significant risk. So what do they carry, students? They carry a significant amount of risk. And what is the duty of auditor in this regard? He has to once the auditor has identified transactions of significant risk, then he has to exclude the effect of identified controls on significant risk transaction. It means that he has to exercise his professional judgment, that whether these transactions have been reflected correctly or not. Okay. So now we move on to next topic. I think everything is clear to you regarding significant risk. This students who have to study it in the context of essay 315. That is identifying the risk of material misstatements, essay 315. Now students, the auditor has to evaluate the internal control system, whether the controls devised by the management are in effect working or not, that whether the controls put in place by the management are able to detect and prevent errors and frauds or not. So this evaluation has to be done by the auditor. We have studied the definition of internal control, components of internal control, so that auditor can evaluate internal control, so that we can understand how an auditor evaluates internal control. Now, how an auditor evaluates internal control? By which methods? Now there are four things. Number one is narrative record. Number two is checklist. Number three is internal control questionnaire. Number four is flowchart. Now remember students that audit program has to be prepared. The audit program has to be prepared only after evaluation of internal control by the auditor. Only then he would be able to devise, only then the auditor would be able to devise a meaningful audit program which can give reasonable assurance on the reliability of financial information. So what is narrative record? Now, narrative record is a sort of write-ups in many papers running into many pages that how the organization is functioning, what are the various controls, like that. So, but since it is a very detailed sort of record, so it is generally applied in organizations, small organizations. It is not possible to write so extensively or so in such a detailed way for large organizations. So what is checklist? Checklist is also very simple. When an audit team goes for audit, then there are a series of instructions. Checklist has series of instructions for the audit team, where the audit team members have to verify whether this thing, that thing, that control is happening or not, whether this step is taken or not. So this checklist has to be filled by auditing. This is also one method of evaluating internal control. Now another method is IC questionnaire. Now IC questionnaire is also one of the very reliable methods of evaluating internal control. IC questionnaire is prepared and it is given to management to fill it up. Bhaiya, give answers to these questions. These are 100 questions of this area. These are 50 questions of this area. These are questions of this area. Kindly fill up these questions so that we can get to know how your organization is working, what checks, what controls you have applied on different areas of your operations, and whether these controls are effective or not. So this is internal control questionnaire. It is in questionnaire form, internal control questionnaire. And another is flow chart. Now flow chart is useful in many large organizations because the transactions, the volume of transactions or the organization structure is such complicated and huge that the flow chart gives all the information precisely, concisely. It gives a bird's eye view. It is in the form of a chart, like organization structure chart, like this thing happening, this, and this way, this thing leads to this thing leads to this. So these are four methods of evaluating internal control by auditor. These are narrative record. Number one, it is narrative record. Number two, it is checklist. Number three is IC questionnaire. And number four is flowchart. IC questionnaire means internal control questionnaire. Students, internal control questionnaire. And remember, students, preparation of audit program. Remember, preparation of audit program begins only after evaluation of internal control. Unless and until auditor has evaluated all the aspects of internal control, how he can prepare an audit program, how a meaningful audit program can be prepared. It is only when all the aspects of internal control have been evaluated by the auditor that audit program is chalked out. Okay, student, I think it should be very clear to you. Okay. So students, till now what we have done, we'll again recap. Till now what we have done, students, we have done components of internal control. There are 5 components of internal control. You have already studied. Okay, 5 numbers. Next, what we have done is significant risk in accordance with SA 315. We have studied what are significant risks, or which transactions at least are to be considered as significant risk transactions, like transactions with related parties or risk of fraud and these sort of things, or transaction involving judgmental matters or complex transactions. These are all significant risk transactions. Number 3, we have studied evaluation of internal control. And methods. Now, which methods we have studied for evaluation of internal control? We have studied narrative, record. We have studied checklist. We have studied internal control questionnaire. We have also studied flowchart. So, for the sake of students' repetition, I would again explain to you all the 4 things, because sometimes 3 marker comes on this also, on these one of these 4 points. Like narrative record is a detailed record of all the organization's control points, and it is a detailed, extensive write-up sort of things, and it is more suited to small organization, as in large organization it is not possible to write such an extensive record. And checklist is where a series of instructions are given, and the checklist has to be filled by members of audit team by inquiring from management, or by asking from people connected with management or their employees. Internal control questionnaire is questionnaire related to every aspect of business functioning of the organization. And but difference between checklist and internal control questionnaire is that this has to be filled up by the management personnel. The auditor only evaluates internal control only upon studying the response given by the management in this internal control questionnaire. And flowchart I have already explained to you that it is in pictorial form, and it gives bird's eye view precisely of the various internal controls functioning in the organization and its various effects, the flow of authority, or what type of controls are existing, so that auditor can understand in a better and summarized way the whole flow of controls in the operating in the organization. So students, we have studied all these 3 things. Now we will move on to 4th topic in this chapter. That is tests of control. Now, what is tests of control? Students, you have to understand what are tests of control. You have probably also studied it in last chapter also, I think in audit evidence. What are tests of control? Now the management has devised various controls in the organization to prevent errors and frauds. Now the auditor has to see the two things. Number one, whether the tests whether the controls devised by the management are capable of preventing error and frauds. Simply put, whether their design is okay or not, whether they can prevent wrong reporting, whether they can prevent wrong financial reporting. And if yes, if they can prevent wrong financial reporting, if these are capable of preventing error and frauds, whether these are working. Whether these are working, whether these are effectual. So the auditor has not only to see that controls devised by the management are capable of preventing error and frauds, but he has to also see whether these are working in reality or not. So what he would do, he would test these controls. What the auditor would do, he would test these controls to see whether these are working actually or not. So I think it is very clear to you what is meant by test of control. Now there is an example in your study material. In test of control, we will study that example. What is test of control? Now test of control can be done by these things. Say the control say that a transaction, say purchase transaction, say transaction relating to purchase has to be authorized by so and so manager, say manager purchase. So what the auditor would do, he would check whether the transaction was authorized by that purchase manager or not from the documents. So this way he can gain satisfaction that the control is working or that control was working at that time. Now another example is reperformance. Reperformance means some activity relating to a control which was already performed by the management personnel. This is again performed by the auditor to gain satisfaction, to gain assurance that this was done correctly, that control was working effectively. Like say an accountant has prepared bank reconciliation statement as on the close of year. So auditor again checks bank reconciliation statement with respect to bank statement and the balance appearing in ledger accounts, that whether bank reconciliation statement has been correctly prepared or not. So another example could be that like checking those transactions which do not leave audit trail. Now, what is this audit trail? Audit trail means evidence where the transaction leaves its footprint, where the transaction leave its mark on every stage. Like when you enter into a transaction through banking channel, then there is an audit trail, there is a footprint, the transaction is recorded in the bank system, it gets reflected in your statement. You can easily verify to whom payment was made on that day. There would be a corresponding voucher, or from whom payment has been received. So, but there are certain transactions which do not leave audit trail, for which there is no evidence. So, like there is written in some manual of the organization that Mr. X would perform function of quality control or something else. He is responsible for doing this thing, but actually whether Mr. X is doing these things or not, it is written in the paper, but actually whether Mr. X is doing these things or not, that has to be seen by the auditor. So this is another example of tests of control. So students, we have learned that tests of controls are controls where are tests where auditor sees that controls devised by the management are capable of preventing error or fraud or not, and whether in fact these controls are working effectively or not. Both aspects, both the aspects have to be verified by the auditor. I think it should be very clear to you what we mean by tests of control. So now we move on to next topic in this chapter, that is materiality and audit risk. It is a small topic. Now, materiality and audit risk. Now, audit risk, students, you would remember, audit risk is the risk of an auditor expressing inappropriate opinion when financial statements are materially misstated. That auditor says that he gives an unqualified opinion that financial statements are okay when these are not okay, these are materially misstated. So now what is the relation between materiality and audit risk? Materiality, you know, anything significant from the auditor's point of view. So the auditor has to consider materiality throughout the audit. He has to consider materiality throughout the audit planning and performance. During both, at planning stage also, he has to consider materiality of significant things, and at performance stage, while performing audit procedures also, he has to study materiality so that he can keep his audit risk at a low level, so that there is little risk of material misstatement. these materiality and audit risk, these are considered throughout the audit at planning and performance stage when identifying the risks of material misstatement, so when things are material, he has to identify those risks, those material things, and determining the, as we have already studied, determining the nature, timing, NTE, nature, timing, and extent of audit procedures. And number 3 is effect of uncorrected statements. If the statements are not corrected, if these are uncorrected, on financial statements, what would be the final effect? So he has to consider all these things. He has to consider all these things. So materiality and audit risk. So we have studied the relationship between materiality and audit risk. Now when the auditor has assessed, identified and assessed the audit risk, students, you have to remember that he has to document the audit risk also. Document the audit risk. He has to write what areas, what potential areas of misstatements has been identified by him, and what risk of misstatement has been assessed by him, and what response has been prepared. This has all to be documented by him. So I think we have studied today, students, components of internal control, significant risks, evaluation of internal control, methods of internal control, methods of evaluation of internal control, and materiality and audit risk. Now we'll take a break for 10 minutes and again we'll resume after 10 minutes. Okay, students? Okay. Yes. Ayaz, break for 10 minutes. Okay. Yeah, yeah. Welcome back, students. Now, students, many of you are writing, sir, what is the full form of gig economy? Look, students, I have used these words by, I have tried to give examples to you so that you can understand the things in a better way, so that we can make this session more lively and more interactive, so that it doesn't become boring or bookish. Even then, I'll try to explain to you what is gig. Okay. So gig is basically a slang word. It is a slang word used in USA, and all these sort of companies which are hiring temporary workers, temporary workforce, which is not permanent workforce, and they work on these online platforms. So, and customers also join them, and other stakeholders also join them because it is advantageous to them or because it is convenient to them. So this is collectively known as gig economy. It is term used in USA in media circles. There is no, it is not abbreviated sort of thing of some word. I think you understand it. So some student has written, sir, from where do we study essays, standard on auditing? These are on the Board of Studies portal. When you go to your study material for intermediate examination, you would find study material of auditing and assurance. And when you click on this auditing and assurance, you would get the names of all the chapters, and the end there are essays. So you can study from there. You would also you must have got a booklet also from Board of Studies. These are available online also. And it has asked for repetition of narrative record. Look, I have already explained twice. Even then, I would again explain it to you. Narrative record is the record of the internal control system of an organization as put in a detailed manner by the auditor. He puts everything in writing. After testing the controls and after evaluating it, he puts everything in writing. He details all the steps. This thing is done in this manner, such control is present, such control is not present. He puts all those things in writing. So as you would understand, such type of narrative record is not suitable for large organizations having complex transactions and large volume of transactions. This is only suitable for small businesses which have limited volume of transactions, where auditor has evaluated controls and he puts something in the form of narrative record. Narrative means descriptive, which is in writing. Descriptive, which is in writing. And record means record. Record means papers. So you clearly understand what is meant by narrative record. So should we move further? I think we should move now. It is all clear to you. And I am happy that you are taking interest. Look, my effort has always been to give some examples which are relevant, which are not only relevant to you but also sound interesting to you, so that you do not get bored. You get interest in the subject also, and you can correlate the concepts of auditing to things around you, so that it is better for you to understand. And in my view, this is also a better way to prepare, because when you study something with example, your mind absorbs it and it is permanently entrenched in our mind. We do not easily forget it. So students, we will now move on to our next topic within this chapter, risk assessment and internal control. And students, regarding that important announcement, I would again uh, like to clarify that I have been directed to inform you that Caro 2020 is not applicable for May 21 examinations. Caro 2020 applicable for May 2020 examinations, although it appears in your study material and it also appear in your study material which is hosted online on BOS portal. So instead of Caro 2020, only you would have to study Caro 2016, Caro 2016. This has been done as the relevant ministry has deferred implementation of Caro 2020 to financial year 21-22. So it has been done keeping in view that you should be happy that this detailed order you would not have to study for May 2021 examination. Caro 2016 is rather a short order. It has got fewer points, and Caro 2020 is a very detailed order and has got many points. So I think it should be clear. So now we would come to the topic of internal audit. Of late, this concept has gained huge importance due to rising incidents of frauds and also in the methods of corporate governance, how the companies are being governed. So internal audit has become an important tool in improving corporate governance. So there has been quite an emphasis on internal audit, not only theoretically, not only academically, not only for the purpose of study, but also practically. So now, what is internal audit? So many of you would say, sir, abhi to we have studied internal control. Now, what is internal audit? Now look, internal control is the system. It is the overall system process designed and maintained by the organization for ensuring reliability of financial reporting, safeguarding of assets, and efficiency of operations, as you already know. Now, once a system has been designed by the management, so what does an internal audit do, or what is internal audit? Now, internal audit is it is also an independent management function. Now, it is also a independent management function. What it does in critical appraisal of activities of an organization and suggests improvements. Now the management has devised a system of internal control, but management further wants to gain assurance whether these controls are effectively working or not, because auditor would come after a year. What would happen till then? The company might lose money, there might be embezzlement. So internal audit continuously, internal auditor critically appraises the activities and functions of the enterprises and suggests improvement and points out weakness. It points out weakness in the system and also suggests improvement. Now, internal auditor can be a CA or a cost accountant as per Companies Act. So first we will again study the definition of internal audit as is provided in your BOS material. Now I would read this definition. Now internal audit means an independent management function which involves continuous and critical appraisal of the activities or functioning of an entity with a view to suggest improvement, to add value and strengthen the overall governance mechanism. So that the function of, simply understood, the function of internal audit is to point out weakness in the system of internal control or in the governance of the organization and suggest remedial measures. Now this is very important. Suggests remedial measures, improvement. Sirf, he has to not only point out mistakes. Remember students, this is very important. Internal auditor has not only to point out the mistakes, he has not only to point out the weakness in the control system or in the functioning of the activities of the enterprise, but he has to also suggest remedial action, and he has to also suggest improvement. Now, as what are the examples of internal audit? Now, practically, students, you might be knowing that banks are subject to external audit, statutory auditor, which we are saying statutory audit. Now this statutory auditor, this is external to the organization. Like statutory bank branch auditors, they visit branch after closing of the financial year. Now, but there are also internal auditors. A new concept like concurrent audit has gained in banks in last 15-20 years. Now concurrent audit is a sort of internal audit, students. Concurrent means simultaneously, to check the transactions as these are happening on daily basis. Now such type of auditor has to give monthly report to the bank management. It is a sort of internal function. It is a management function, and he has to help. He has to not only point out mistakes or incidents of errors or frauds, but he has to also suggest remedial measures. He has to suggest improvements, like if some account is showing warning signals of, or if the installments of a loan account are not coming, there is a default. So then the internal auditor or say concurrent auditor, he can alert the management, he can point out in his report, and he can help that management take corrective action so that account does not become bad. So these things you would study in detail in the bank audit, but for the giving you an overall view, a synopsis that what is meant by internal audit. So students, remember, internal audit is an independent management function which is meant to critically appraise the activities and functioning of the organization, and to also suggest remedial measures. He not only points out weaknesses, but also suggests remedial measures, how these weaknesses can be overcome, how these can be improved, what the management can further do. So these are the functions of internal auditor. So internal audit department is a department within the organization which helps management in achieving its objectives, and by a continuous, it is a sort of continuous in-house mechanism where mistakes are continuously uh, brought to the attention of the management, and remedial measures are also suggested. So in organizations where there is effective internal audit department operating, so it also provides reasonable assurance to the auditor, to the external auditor. It provides it helps in enhancing his degree of confidence that financial statements would be free from material misstatement, because that concern has got an effective internal audit department functioning. So you should understand clearly what is the meaning of internal audit. I think you have understood very clearly what is the meaning of internal audit. So students, I would also like to one line in Hindi, like इंटरनल ऑडिट का काम खाली गलतियां ढूंढना नहीं है, बल्कि उसको ठीक भी करवाना है. So remember this thing. In suppose you get some case study based question on internal audit, most of the questions on internal audit, case study based audit would be, case study based question would be solved using this concept, that the function of internal auditor is not only to point out mistakes or weakness, but also to get these corrected, साथ ही साथ ठीक भी करवाना है, but and also to get this corrected and to take appropriate remedial measures. Am I clear? I think this should be very much clear to you. What is internal audit and what is the scope, or what are the functions, broad functions of internal audit. So students, now this is also a very long, very deep concept, internal audit. There are many standards on internal audit, SIAs, standards on internal audit, issued by ICAI, but these are not to be studied in detail. You just remember these are standards on internal audit. You might study for better understanding. The students who are interested, they might study for better understanding. And now we would come to the issue that where appointment of internal audit is compulsory. Now students, remember, under Companies Act, certain class of companies, under Companies Act, students remember, certain class of companies under section 138 of Companies Act 2013, certain class of companies for certain class of companies, it is mandatory now. Not all companies, now we are talking here only of companies. Remember, we are only here talking of companies. So not all companies are required to appoint internal auditor, but there are certain class of companies, certain categories of companies where appointment of internal auditor is mandatory. Now, which are those class of companies? Next question is, now we will study which are those categories of companies where appointment of internal auditor is mandatory or is warranted under section 138 of the Companies Act. Okay, students. Now you understand the relationship between law and auditing as we have studied in chapter 1, that you need to have knowledge of company law for auditing also, as we had studied in chapter 1, relationship between law and auditing. So compulsory appointment of internal auditor under section 138. For which class of companies? Categories of companies. Number 1, listed companies. Listed companies, you already know listed companies. Companies means whose shares are listed. Okay, so these are listed companies. Every listed company, they are mandatorily required to appoint internal auditor. Why it has been done so? You can very well understand. For better corporate governance, so that companies are, affairs of the company are run in a better way, so that financial statements are less prone to risk of errors or frauds and risk of material misstatements. Because shares of these companies are listed, these are traded on stock exchanges. So there is, for better transparency, for the sake of investors, people who have invested the money in these companies, so that the financial results shown by these companies in their financial statements, they are free from material financial misstatements. Certain public companies. Now, which kind of public companies? Certain public companies which are unlisted. Which are unlisted, not all, but there are certain criteria. Now, these provisions are contained in law in section 138. So you have to remember these provisions, as these are students. You have to learn them. There is no other alternative. There is no other option. Now, certain public companies, certain unlisted public companies which are having paid up share capital of 50 crores or more during the preceding financial year, in preceding financial year. And second condition is sales of turnover, sales public turnover of rupees 200 crores or more. In preceding financial year. So I would write in short PFI, in preceding financial year. यानी कि if we are considering year 2021, then we have to consider whether the turnover of the company in preceding financial year, that is 1920, was rupees 200 crores or more. Turnover is the word used. So because it is a provision of law, so we would remember these words as these are contained in law. outstanding loan or borrowings from banks or financial institutions of rupees 100 crores or more. Now, here it is point of distinction, not the closing balance, but if the company has borrowed more than 100 crores, 100 crore or more at any time. Now remember this correct word, students, at any time during the previous year, during the preceding financial year. Suppose the company had borrowed 150 crores from a bank during the financial year 1920, but at the time the books closed, the financial year closed as on 31st March 20, there was balance of say 60 crores. So, but during the year at any time the outstanding balance was more than 100 crores. So the applicability of this internal auditor would arise. And another condition is number 4 is deposits of 25 outstanding deposits. I'll write here on next. Fourth condition is outstanding deposits rupees 25 crore or more in preceding financial year at any time. Here it is also at any time during the year, at any time, at any point of time. So there are, students, 4 conditions for compulsory appointment of internal auditor in case of unlisted companies. So we'll remember all these conditions one by one. Number 1 condition is paid up share capital of 50 crores or more during the preceding financial year. Or number 2 condition is turnover of rupees 200 crores or more during the preceding financial year. Third condition is outstanding from banks or financial institutions at any point of time during the year should be 100 crores or more, or deposits of rupees 25 crore or more in previous financial year, preceding financial year. And these are categories of unlisted public companies. Further, some private companies are also required to appoint internal auditor. Private limited, you have already studied in company law what is a public company and what is a private company. Private companies, which class of companies? There are only 2 conditions. Only condition number 2nd and 3rd of unlisted public companies. You can remember in these way. Turnover of rupees 200 crores or more during preceding financial year, and bank borrowings of rupees 100 crores or more at any time during the preceding financial year. So we have studied that Companies Act 2013 has provided for compulsory internal audit in following 3 situations. We will summarize it once again, students. You have to learn these limits by heart. MCQ can come, MCQ can definitely come given the emphasis given by Board of Studies on internal audit. So all the following classes of companies are mandatorily required to appoint internal auditor under section 138 of Companies Act 2013. All listed companies. Number 2 is unlisted, certain categories of unlisted public companies. Categories, limits. There are 4 conditions, 1, 2, 3, 4, which you have to remember. Along with their threshold limits. What is the limit of turnover? What is the limit of bank outstanding, or what is the limit of paid up share capital? These limits are very easy. Turnover is 200. Bank borrowing is half of that. You can remember it in that way. Paid up share capital is 50 and deposit is half of that, 25. So I am also telling you the way of remembering also. I am also making your way easy. And certain categories of private companies having turnover of 200 crores or more at any time during the financial year, or having bank borrowings of rupees 100 crore or more at any point during the preceding financial year. So this should be very clear, and I would again want you to emphasize that law provisions have to be remembered, as these are, there is no other alternative. Now we have studied function of internal audit, scope, how does internal auditor helps in an organization, and now qualification. Now internal auditor has to be, as per Companies Act, has to be a CA or cost accountant. Now one important question comes in the mind, whether he is employee of the company or not. It can be both ways. You have to understand it very clearly. Many times MCQ can come on this. Internal auditor can be employee also, cannot be employee also. Giving you an example. Suppose Mr. X, who is a CA, he is appointed by ABC Limited as internal auditor. Now this internal auditor is on the payrolls of this company. So when he is on the payrolls of this company, he is an employee of the company. So internal auditor can be employee of the company. Suppose this company ABC Limited does not want to hire internal auditor as an employee. It can hire the services of firm of chartered accountants, say XYZ and company, CA. It hires a firm of chartered accountants to carry out the internal audit function. So in this case, this firm is not an employee of the company. Like in banks, concurrent audit is many times done by the employees of the banks themselves, who are employees of the internal audit department. So they are carrying out the function of internal audit. Sometimes some banks are hiring services of CA firm for carrying out concurrent audit. So an internal auditor can be employee, cannot be employee. He can be employee, as well as some non-employee can also be hired to perform services of internal audit. So it should be very clear to you. Now, what are the benefits of internal audit? These are all derived from the definition of internal audit. It helps in pointing out weakness. It helps governance function, and all that of stuff. It suggests remedial measures before some sort of fraud or embezzlement or error occurs. So these are written in your board of study material. You can very well read and derived from the very definition, very basic function scope of the internal audit, which I have already told you. Again, you have to remember, students, the basic concept in internal audit is that it is a job of internal auditor. It falls within scope of his functions that he has not only to point out weaknesses in the system. He has not only to point out weaknesses in the system, but he has also to get them corrected and suggest remedial measures. He has also to get those weaknesses pointed out by him corrected simultaneously, or he should advise the management how these should be corrected. Okay, I think it should be very clear to you what is internal audit and what is the scope of internal audit, students. There are some standards of on internal auditing SIAs. You can well study like how to plan an internal audit. Like there are essays on auditing documentation and quality assurance, communication with management. If you are interested, you can very well read them. Now, students, we move on to next concept, next topic. So, are you clear, students? Are you clear regarding meaning and scope of internal audit? There should not be any ambiguity in your mind. I am saying it again and again. Let me check your mails. So if something has come. Yes, I think you have studied the meaning of internal audit. You have understood the meaning of internal audit. And some students are asking what is the difference between internal audit and external audit. I would like to make you clear that external audit is not in any case, students, is an employee of the organization or the company. He is always an outsider. He reports to the management, but he is not on the payrolls of management. He does not perform any internal management function. He, after studying the internal control system, he gives only his report whether the financial statements are free from material misstatements or not. He has to issue a unqualified or qualified or disclaimer of the report. Whereas internal auditor, he is part of the management system, and it is a sort of management function meant to improve the internal control structure of an organization, so that the external auditor, which is a statutory auditor appointed under Companies Act, he can gain more assurance about the internal control system designed by the management, about the reliability of financial results, about the financial results. So I think I have explained to you the difference between internal audit and internal auditor and external auditor. And the main point, students, which you have to remember very clearly, I am repeating it for the third or fourth time, that the function of internal auditor is not limited to pointing out weaknesses or deficiencies in the system. His function is to point out the weaknesses and deficiencies and to get those corrected or to suggest remedial measures also. Okay, students. Now, students, we will move to next topic. This is short topic. It is internal. Now you have studied internal control. Now we will study internal financial control. Okay, students. Just see. Now we'll study internal controls. You have already studied, and now we study internal financial controls. Now, internal financial controls. Why would have to study this? It is part of this system. It is being studied because internal financial controls have been specifically stated under section 143 of Companies Act. When you would study the chapter of company audit, chapter number 10, the auditor has to specifically give his opinion that whether internal financial controls, whether the company has adequate internal financial controls, and whether these controls have been effective or not, whether these internal financial controls are operating effectively or not. So broadly, you can understand internal financial controls are that part of internal control system which broadly relate to financial reporting. So there is a definition of internal financial controls given under the Companies Act. Now you have to remember this definition. You have to remember this definition, and this covers broadly the same areas, but there is difference between internal control and internal financial control, as you would analyze after studying the definition of internal control and internal financial control. So for your understanding, I am quoting this definition under section 134 of Companies Act. Internal financial controls. What are internal financial controls, students? Internal financial controls are the policies and procedures adopted by the company. Now, what are internal financial controls? Internal financial controls are policies and procedures adopted by the company for its orderly conduct of the business, including adherence to company's policies, safeguarding of its assets, prevention and detection of frauds and errors, and accuracy and completeness of accounting records, and timely preparation of financial information. So internal financial controls are more related to reliability of financial information, financial reporting, as compared to internal control, which is a broader term. So internal financial controls are part of internal controls, to put it simply, but it is a rather narrower concept. It is a narrower concept as compared to internal control. Internal control contains whole lot of things pertaining to entities, operational effectiveness and efficiencies, but internal financial controls are more related to reliability of financial information and financial reporting. You can understand, and you can read the definition of internal financial controls as provided under the Companies Act. So we can very well understand that internal control is a broader term, it is a broader concept, and internal financial control is a narrower concept. and it has been envisaged under Companies Act 2013. Specifically, the auditor, while issuing his report, has to specifically report under Section 143 of Companies Act that whether internal financial controls, remember this internal financial control, a question can come, an MCQ can come in the exam. We state that under Section 143, auditor has to report on what? Internal control, internal financial control, or something other options are given. So you have to remember this crux word. Here under Section 143 of Companies Act, the word is internal financial controls and not internal control. So students, is it clear? And we have to study this internal financial controls because a duty has been cast upon the auditor, reporting duty has been cast upon the auditor under Section 143 of Companies Act to specifically report on this matter of internal financial control. So that is why it becomes important. That is why we are studying it. Okay, students. Now, one more topic. One more differentiation. Right now, I have explained to you difference between internal control versus internal financial control. This we have studied. Now there are two more terms which are versus internal control over financial reporting. These sound confusing. Internal financial control you have already studied, and now what is internal control over financial reporting? Internal controls over financial reporting. Now, internal controls or financial reporting are required when auditors are required to express an opinion on the effectiveness of internal controls over financial reporting apart from the normal reporting he is required to do. So what is internal controls over financial reporting? Where auditor has to express an opinion on the separately on the internal controls over financial reporting apart from his normal opinion on the financial statements which he is required to report. So the normal opinion, the true and fair view, the unqualified or qualified sort of opinion reported by the auditor in his audit report is distinct from this opinion on internal controls over financial reporting. This may be required separately. So this is the meaning of the term. So students, now we have completed this chapter of risk assessment and internal control. We have broadly covered the topics of risk assessment, audit risk, detection risk, control risk, inherent risk. We have already studied the components of internal control, significant risk, internal audit function, when appointment of internal auditor is mandatory, evaluation of internal control, and other things. And I think you have enjoyed this lecture and previous lecture on this topic. I have tried my best to make both of these lectures compulsory. Sorry, not compulsory. Both of these lectures interesting and lively. So would be off the air. So thank you. Good night. Okay. Yes, yes. Yes. I I finished the chapter. Okay.